Morning, Fractal Effects team. We're just tracking the market from the early model, so please make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So today is Tuesday. There is no news. Usually Tuesday likes to set the lows for the week, and on no news days we pretty much sweep back and forth. There was a lot of consolidation in the morning here. Sweep back and forth, returning to either the NWOG, which we're sitting in, the new week opening gap, or the NDOG, the new day opening gap, which is down here. Now we have a double break to the downside, and we have a mixed model sell. All we want to see is a retracement. So gesticulating here, this would be our target and Asia low, but I want to see a proper retracement back into most likely the New York opening gap, or at least to the 20 EMA. But we have not seen any retracement after double break. Double break was right here. We've continued to drop a little bit. We're sitting inside of a 1 hour fair value gap. So yeah, I want to see it come back up here. Most people would get FOMO here. They just see the market drop. And as I said, once you have a double break with a sell model, you know, people want to jump in. They're like, it's going to go down here. It's going to go down to the 15-minute fair value gap right here. It's going to go down to the NDOG. Yeah, I mean, the probabilities are high, but where's your entry? Said it a million times. If you want to climb a mountain, you need a foothold. Can't climb a mountain without a foothold. And that's what we're looking for. We know where it's going. We know where the peak of the mountain is now. We know where we want to go. We just need an entry. So I want to see a full retracement, most likely to at least the 20 EMA. We might get a confirmation before that, which is even better, because once we get a confirmation, then all the confluence is telling us this thing wants to drop. But we could get an early retracement before confluence back to the 20, touch the blue zone, and then set up with a 5M fair value gap short. So that's the difference of knowing where it's going to go, but still having a good entry. So even though I know it's coming down here now, that's the highest probability, I should say, over 70%, I'm not going to jump in because the market could come all the way up here, hit the blue zone, and then set up for that short. Here's US 500. Everything's in an alignment. We have a double break on both of these assets. So just looking for an entry now. But my mind's made up. I cannot buy this market. In about 7 minutes, our range will be fully formed. And if the market drops without us, that's the difference. That's the difference of being strong or getting FOMO. If it drops without us, that's a runaway market. It never gave us an entry. That's okay. That's what people don't understand. That's the difference between stalking the market and chasing the market. I'm not here to chase this market. I'm here to stalk it. I want to follow it. I want to enter when it gives us an actual proper entry. If it just drops from here, that's not an entry. There's no fair value gap here. And it can do that. It can push without us. That's fine. We'll catch it tomorrow. We'll catch it the next day. You only need one successful trade a week if you're doing this right, with a 1 to 3 risk to reward. That's 3% a week, 12% a month. Tell me any bank that'll do that for you. Again, this does not faze me. Even though this is my target, I still need a good entry, and it ain't going to be from down here. I want it from up here. I want it from the 20 EMA, or even from up here. But if it runs and it touches the NDOG and it takes out Asia lows, which are pretty much right there, so it'll push past Asia lows and then the NDOG down here, but it's going to do that without us then. I want a proper entry. You're not going to see it, you're not going to see a setup exactly how you want it every day, but that's why you don't trade every day. Day trading is not everyday trading. You wait for your setups. You match a sell model that you have with a proper sell setup. You match a buy model with a proper buy setup. Right now, all of our bias is bearish. But what am I going to do? I'm going to jump in here to go to here? That's not a 1 to 3. And again, if it runs without us, it runs without us. There's our DSD low. When it hits that, we're done for the day. So there's still space. There's that yellow line. That's previous day's low. So here's your DSD low, previous day low, and it's sitting inside of a 4-hour fair value gap. It could drop past that. This is just the low-hanging fruit. So if I get an entry from up here, I'm only aiming for the low-hanging fruit. That'll probably give me my 1 to 3. I'm not greedy. I'm not trying to get all the way down here. But again, today is Tuesday. Tuesday's footprint usually takes us to the low for the week. If you're bullish, you're in a bullish market, Tuesday sets the low for the week, usually 70% chance or higher. And if you're bearish, Tuesday sets the high for the week, 70% chance. So right now we hit this 15-minute fair value gap, but again, I'm still waiting for my proper retracement and an entry short. Nerves of steel, you gotta have them. I feel it every single day. You don't think I wanted to jump in? Like 5 years ago, I would have easily jumped in here, thinking the market's going to go down to the end dog, the new day opening gap. It's going to go down to the DSD, and it's going to most likely sweep previous day's low. Would have jumped in the blink of an eye. And then the market begins its retracement back up and takes out my stop loss. This market is not worth entering until I get a proper retracement and a proper 5M bearish fair value gap after that. We're 2 minutes away from the range formation for the spotlight strategy. Now, I know this looks a little messy for you guys. Here, let me just... A lot of these boxes I just painted on myself. That's the actual strategy. Remember, what we've created here is a market translator. This is not a time lagging indicator. This is a market translator. It's not telling you where the market has been. It's telling you where the market wants to go. Market wants to go down here, it wants to go down here, and again down here. But just because we know where it's going doesn't mean we can jump in until we see a proper foothold where you can slip off the mountain. You don't think they want to run your stops like 5 times before they come down here? Remember, there's an algorithm that controls the market. And it's not only psychology, it's reverse psychology. It is the most elegant algorithm ever designed to mess with the human brain. It wants you to think this is a good place to enter so it can take out your stop loss. And then it wants you to enter here so it can run it again. It's going to probably run it 2 times before it drops. That's why we wait for every single part of that checklist. Double break, retracement back to one of our key zones, and then a 5M bearish fair value gap short, which we tap on a 1 minute, and then we drop and remember, hit a fair value gap, create a fair value gap. We hit one on the 5M, we create one on the 1M. That's our entry. All those points of confluence keep us from getting FOMO. I've been there. I've checked off literally 6 things off that list, and then that 7th one never checked off, but then the market turned against me. But my checklist saved me. Capital preservation. That is the number one goal. Not making money in the market. Capital preservation is the number one goal. Once you understand that, you will become a profitable trader. Until you understand that, you're just a regular retail trader susceptible to FOMO. So still waiting. You know our motto here, if it feels like you're watching paint dry, you're doing it right. If you're sitting there biting your nails, sitting at the edge of your seat, your cortisol levels spiking on high, your heart rate beating out of control, that's doing it wrong. That is doing it wrong. There's only one more confluence that's missing, but we don't necessarily need that. Our spotlight zone, our dealing range is complete. As soon as we break out of either side of that, we'll get a confirmation. The indicator paints out an arrow. There you go. Here's our retracement. Let me get rid of some of this stuff here. This is a 1 hour fair value gap. We're sitting inside of a 7 hour fair value gap. I like to mark these out. This is just my own, just for my own knowledge. But I know where those are now. I even like to mark out the last 4 hour candles, midpoints, so I know where we're sitting. So this is our retracement. I want to retrace back to one of these key zones. It could be the 20 EMA. It could be the midpoint of the NWOG, the new week opening gap. It could be our blue zone, or it could be the New York fair value gap. They're all sitting right there. Those are the major points. So I want the market to run up into here, reject, give me a bearish fair value gap short. I cannot buy this market, so I can only look for a short. So for the people who think, oh, the market's flipping, it's reversing, I can jump in the other way. No, that's the beautiful thing about this market, or sorry, beautiful thing about our strategy, is it cuts off 50% of the options for you. It makes it easy. No, you cannot buy this market. You cannot buy this market when you get a double break to the downside. You just walk away. So even if it keeps going and we get a bullish confirmation, then we're done. I'm not interested in buying this market. You want to match these up, as I mentioned before. When you have a upside expansion model, a buy model, and you break the manipulation range to the downside, that is a perfect upside, and vice versa for downside. That means all the confluence is heading in your direction. Right now, we actually have a mixed model sell, so you want to proceed with caution. But there's your retracement. So for people that went in short here, with this as their target, it just flipped on them, right? Now it's coming to like take out your stop loss. We're going to ride right back to the blue zone. These blue zones that are painted by this indicator are highly algorithmic zones that the market is drawn to and pushes from. The market is drawn to them. They're not fair value gaps. They're not EMAs, even though we do have those painted out here as well, just for extra confluence. Now these are something else. We sat down with 3 quantitative analysts and a chaotician who studies chaos theory to come up with the math on the back end of this. There's a ridiculous amount of computation happening on the back end of this. This is not a time lagging indicator. This is a market translator. Since I can't buy this market, I'm not even worried about looking for an entry long. And even though there was a 70% chance the market was going to retrace back to the blue zone, I wasn't interested in taking this buy. These are short moves. The blue zone strategy helps you get the biggest wave for the day. Our goal is to catch that big wave. Every session, be it New York, London, or Asia, has built within it a big wave after all the manipulation is done. You'll see the market just drop off, or the market just skyrocket. That's the whole point of our strategy, is to catch that move. There you go. This is a beautiful place. Now, one of two things is going to happen here. Either the market's going to just keep pushing and give us a bullish confirmation, which we're not interested in. We're not looking to buy this. So if we get that bullish confirmation, we're done for the day. Go off to work, go hit the gym, whatever you do. We're not here to stare at this market all day long. Or the second thing is we're going to set up with a 5M bearish fair value gap short, which is what we want. And all of that has to happen within the next hour. That's our window of opportunity. If we do not find a high probability trade setup within an hour of our range formation, we're done for the day. All of these rules are put in place to make sure there's capital preservation, first and foremost. Now we're rejecting off of this. So there are people that have gone long here. They think this is the rejection because why wouldn't they? The market's been going up. We had an upside expansion model. We took out the bottom of Asia here. And if it does, if it just happens to be that low probability that the market's going to run the highs now, that's fine. Sometimes the best trade is the one you didn't take. But your models have to match up. Sell model, sell profile, entry. Buy model, buy profile, entry. So we've taken out all these highs. We're sitting inside the New York fair value gap. As mentioned before, if it keeps pushing, that's fine. I cannot buy this market. Second you get a double break, especially from both assets, I'm not interested. There's a high probability that the market will most likely, the biggest move for the day will be to the downside. But look at this, what do we have here? We have equal relative highs. Market could come run these highs first, stop short of London high and then drop. We're here to catch the biggest move. Not this little rinkety-dinkety move, not this move up. What's the big move going to be? To me, this is still a retracement. If we get a bullish confirmation, then we have a false day. That means we're done. And again, that's the other reason we call this a translator. If you're sitting across from somebody who doesn't speak the same language as you, it's the translator's job to let you know when the conversation is finished. And that's what this, I don't even like calling it an indicator. But that's what this strategy is trained and planned to do. To let you know when it's over. If you have a conflict, you have a sell model, a sell profile, and you just got a bullish confirmation. I just told you I can't buy this market. So if we get a bullish confirmation, those two strategies conflict, the spotlight strategy and the blue zone strategy. That's a false day. We walk away. So we're losing some gas here, losing some steam. Let's see what happens. Is it going to push through? Or is it finally ready to kind of give us that 5M bearish fair value gap? Could come up here and wick this. Take out these highs. Remember, the market hates straight lines. So it could come out here, come up here, sweep these highs, and then set up for a short. Just about remaining patient now. So if it wicks up here, it actually adds more confluence. If it just wicks and closes and then gives us our 5M bearish fair value gap, that's going to be the big move for the day. That will most likely create an entry and a drop right into previous day's low. There's a high probability of that. Right now, this is exactly what we want to see. Double break to the downside. The only thing is we did take out London lows. I'm always a little leery when you have an upside expansion model and then you take out London lows and hit this. We hit this purple zone from yesterday. We're just going to proceed with caution. We want to see all the points of confluence. I want to see a immediate rebalancing candle, an engulfing candle, which is what looks like we're getting here. Still got 2 minutes, 35 seconds. And then I want to see a 5M bearish fair value gap created. And that's what we will take down here. But stay patient, wait for all the points of confluence. The other reason you got to wait for that retracement is, remember, that's what becomes our stop loss eventually. This retracement, if we do get that 5M bearish fair value gap short and we enter it, a few ticks above here is our stop loss. Safer place is probably up here, since, like I said, we have these equal relative highs, and the market might want to run those before dropping. So we got to proceed with caution. We could get that immediate rebalancing candle here, and then the next one could still run up. But that's the step. Double break. First you get the double break. Let's mark it out for you guys. So remember, there's our manipulation. That was the break. That was the double break. Here's your retracement. Now we want to see an immediate rebalancing candle. And then eventually our 5M bearish fair value gap. So we have all of these in place. We just need to see a 5M bearish fair value gap now. But this is telling us that the market wants to drop. And if it doesn't give us our 5M bearish fair value gap and just keeps running up, that's a false day. Capital preservation. We didn't enter. We didn't lose anything. Said it before, sometimes the best trades are the ones you don't take. But we wait for everything. Confirmation, double break, retracement, immediate rebalance, which we didn't really get here. This isn't a engulfing candle, but I'm waiting for now that 5M bearish fair value gap as our foothold to go short. So just got to stay patient. Let's watch this out. Play some music. Do whatever you do to relax. Just keep waiting. There you go. There's your drop. Now let's see if it gives us a 5M bearish fair value gap. Or it's going to use this to create or engineer new liquidity. There's people that are going long off of this. They were waiting for the market to come back into this fair value gap so they could take it long. We're waiting for a fair value gap to be created to go short. By the way, do you think this is all a coincidence right here? As soon as we got a double break, which was, we had the double break at 9:55. At 9:55, I already knew that we were going to get a retracement, an immediate rebalance, and we were going to wait for a 5M bearish fair value gap. Now, if this wasn't an algorithm, could I have called it that way? No. So still patient, stay patient, still waiting for that 5M bearish fair value gap. So we still need one more candle, 3-candle pattern. Just like I said, relax. And if it uses this fair value gap right here to run back up here to take out these highs, that's fine too. I'm not going to buy this market. I can't. If only you knew how many people just jumped in right here. That's not enough confluence. I'm not saying the market can't keep running from here. Sure, that'll be a false day. We're done. But I'm just saying there are people that are jumping in here without really knowing why. It's 50-50. That's gambling. You're better off just going to the casino. One minute, 36 seconds left in this candle, and then I want to see one more print to give us that 3-candle pattern, the fair value gap. And then we want to tap it and go short. I've been in many, many situations where the market either took off without me, even though I knew where it was going to go, or it took forever to actually give me my entry pattern. Meaning that it created the 5M fair value gap, but it didn't tap it. It created another fair value gap, and it didn't tap it. It just kept dropping, and I kept watching it get further and further away from me and closer to my TP. And that's fine. That's the name of the game. Tell me any job where you can work for 2 hours and make the kind of money that traders make. Get the kind of returns and percentages that they do. No bank's going to pay that. No employer's going to pay that. But that's the reason they make the big bucks, is because they're patient, bulletproof. This is looking beautiful. 18 seconds left. I want to see one more candle print and give me that 5M bearish fair value gap, and then I'd be interested in looking for a foothold entry short. And this time I think I'll go past the end dog. I'll see where my 1 to 3 is, but most likely into the DSD low. There's our next candle. Remember, the indicator paints that out for you where the fair value gap's going to be. See that little red box? It's starting to paint it. Oh, there's a perfect storm right here. There's a perfect storm waging right now. this just got interesting. If we leave this fair value gap open, then our probabilities increase. Four minutes. Gotta wait. Trust me. I understand how you feel. I understand that FOMO is a real thing. But until you literally wait and check off each one of these points of confluence, it doesn't matter. Look at US 500. We've already closed off that area. There is no fair value gap forming here now. So that means this is the only asset that could potentially even form one. And if it just runs right past it to take out these highs, then again, we're done. I need a foothold entry. Because they might even want to do that. They might want to run these highs first, then drop the market. All I know is I'm anticipating the biggest move of the day to be to the downside. But I still need an entry here. And then I still have to get a 1 to 3 risk to reward. Remember I said this would be my stop loss. 1 to 3 could take me all the way to the DSD low. And again, if it takes off without us, it takes off without us. I don't care. Foothold, mountaintop. Remember, once we get a bearish confirmation, there's a 70% chance we will retrace again and take the first fair value gap that's created. So it could still come back up here. This didn't scare me, this big drop. This just confirmed my bias. That's all this did. This is still my foothold. This is my 1 to 3. If I get it, I get it. If I don't, that's fine. I'll catch it tomorrow. I always hear people comparing this to a video game. This is not a video game. This is not a game. This is your job. I don't know too many people that show up to work ready to play. They're ready to do work. This is quantitative analysis, pattern recognition, chaos theory. We got 46 seconds left. Everything's all but confirmed for us. I just need an entry now. And that is going to be it right here. This fair value gap here. Oops. Now, I know I got a lot of boxes painted here. I get it. There. Let me get rid of some of this stuff for you. I don't really need all this stuff anymore. Let's get rid of that. Get rid of that. Even though the indicator paints out all this stuff for you, just for me, I actually like more of a visual representation. Maybe I'll leave those arrows up. So US 30 is already confirmed a bearish confirmation, adding more confluence to us. But we still need an entry. We still got to tap either this one And if it leaves this open, then we'll tap this one. But it's going to tap the first 5M fair value gap to go short. We need that. Got to do this the right way. Don't worry, there's plenty of TPs to the downside. NDOG, DSD, 4-hour fair value gap, previous day's low. Don't get FOMO now. You waited this long. No foothold yet. This is just a drop. Said it a million times. Just because I know where it's going doesn't mean I can enter. When we do actually enter the market, I have the cleanest entries. I have the cleanest entries where the market might barely come close to my stop loss. It's my exits that aren't always the best. That's every trader. Every trader will tell you that. Because once you see the money going up, you want to jump out, but you got to stick to the plan. You wait till you hit 1 to 2 risk to reward, then you roll your stops to break even, take some off the table, and let it roll to 3. We actually went a little over 3 here. I'll show you where 3 is. Use the tools that TradingView offers you. Short position calculator right here. You can find this in the toolbar here. I've actually just added it to my special toolbar here. Short position calculator, long position calculator. Just drop it in. Lets you know exactly what your 1 to 2 would be, 1 to 3 would be. Right here, reward, risk reward of ratio 3. That's if we enter here and our stop loss is here, of course. See, just short of the end dog, I'm still waiting for an entry. Now, if it leaves this fair value gap open, this will become my area of interest, I should say, where I'm looking for an entry. One minute, 50 seconds left. Now keep in mind, it could still come all the way up here. Anytime it leaves a 5M fair value gap open, it could come back and tap it later. So just be cognizant of that. That's why I'd like to get an entry here. I want to see this fill in. If this fills in the next minute and 23 seconds, then I know we're coming up here because this is the only fair value gap that was created then. But if it creates one here, we've already done an early retracement. It could use this fair value gap, touch the 20 EMA and drop. Just be careful. Proceeding now. We stopped right there, just short of the end dog. And that's beautiful. We just closed off this would be fair value gap. So that means the market wants to retrace up here, or at least to the 20 EMA. That's where we'll look for our short entry. Now it's getting exciting. This is what we were waiting for. Same thing with US 500. We actually did not leave a bearish fair value gap here, so it's probably going to use the purple zone. Purple zone, 20 EMA. We did leave a little bit of a volume imbalance right here. Could come up back here. Stay patient. If you've been listening to us this whole time, you've been patient during this whole time. What's another few minutes? So retracement, this one was supposed to indicate retracement. That was our immediate rebalance. And we should paint one more out. There's our 5M fair value gap. We want to tap it and eventually go short. If this wasn't an algorithm, I could not paint this out like this. If this was completely based off of buying and selling pressure, which makes me laugh. By the way, if the market really was based off of buying and selling pressure and based off of actual human trading, I wouldn't want to trade it. You know how chaotic human beings are? How unpredictable? Does this look unpredictable to you? Double break, retracement, immediate rebalance, 5M fair value gap. Let's see what happens when we tap it. Now, the only thing I don't like are these equal relative highs that the market left up here. That's why I want to see another engulfing candle after it hits this, which on the smaller time frame is hit a fair value gap, create a fair value gap. We're creating a 1M fair value gap, bearish one. Let's see if we've even tapped it. I can't even see here. Also, make sure your fair value gaps are painted correctly. Some people paint them even if you're off by a pip or two. You might be kicking yourself later thinking like it never touched my fair value gap, and it actually did. You just didn't paint it correctly. Doesn't make sense for it to turn around here. Just to make sure, I'm going to turn this off just to see. Yeah, no, we did not touch it. You can turn off all of these if you don't like all the different boxes here. Remember, it's just a visual representation of what's happening in the market. The NWOG is the new week opening gap. This is the gap that's left between Friday's close and Monday's open. It paints that out for you. It's a valuable area throughout the week. So it's good to know where it is, but I understand that it can get a little visually jarring, so you can actually turn this off. You can turn this off. You can turn off majority of these levels. And there are people that even get FOMO here. They think, okay, it's not, it looks like it's starting to push down. Well, why would it push down from here? We do have a purple zone, mind you, but that's on the 1 minute. The 5 minute is the levels we want to watch. On the 5 minute, it's clear. We did hit the 20 EMA, but it doesn't make sense to go drop just short of a fair value gap. So we're going to wait. And for whatever reason, if it does drop short of it, again, it doesn't matter. Capital preservation. We were protected. Imagine this if this was a zombie apocalypse. Are you more interested in protecting yourself from getting bitten or killing zombies? There's your tap. I'd like to see it even go deeper. And like I said, I wouldn't be surprised if it actually even went higher and took out these highs. This is already, by the way, giving me signs of a, well, we know market's consolidating today because there's no news, but it's already giving me signs of a market that I would love to stay out of when you see this much back and forth, when it's so unnecessary. But if it shows us the setup, we're going to take it. I want to see a 1M bearish fair value gap created here. About 22 minutes left in our stream. I personally don't like to see this much back and forth. Especially since we haven't gotten a confirmation. We had two, this is technically two early retracements. That's rare. It's rare to see two early retracements this deep without a confirmation. That's just a representation of a consolidating market. A lot of manipulation. You do still have these equal relative highs up here. So if it wants to drop, it will most likely want to run those. That's why you got to proceed with caution. Still no 1M bearish fair value gap created. So no entry yet. We actually did hit the end dog here on the US 500. Just short of the DSD. Let's see what this looks like on the 5-minute. I'm not a fan of this, the fact that we hit the end dog. Now they're truly playing both sides. There are people that are going long to take out these equal relative highs, and people waiting to go short to go into this end dog. It's already looking like a sloppy market though. Two minutes, 35 seconds left in this candle. A little over 15 minutes left. Let's see if this gives us that 1M bearish fair value gap that we're looking for now. So two things that are making me want to stay out of this market altogether is one, we have not got a bearish confirmation on the 5M, just stopped short of it. Two retracements, deep retracements before confirmation, and US 500 has already hit the end dog. "13 seconds left. Let's see if this gives us an engulfing candle on the 1M. I mean on the 5M. No, it doesn't look like we're going to get that. Still no bearish fair value gap here created. 14 minutes left in our stream. Still waiting for all points of confluence. Still waiting for a 1M fair value gap to be created. Looks like it's coming. It sure is taking its time. Let's see if one of these stays open at least. "34 seconds. It's a good sign. The market wants to push down now. We've left open that 1M fair value gap. Let's see what that would look like. This late in the game, the end dog would be my TP. I wouldn't want to. Sure, the market could go past that into that DSD, but it's just not. It's too much resistance today. It was just too much back and forth consolidation. But all your points of confluence were met. 1M tapped, closed. That'd be the better run. We're 6 minutes left in our stream. As soon as it hits this end dog, we'll most likely conclude unless it takes a long time to gesticulate and get down there. Should start pushing now. These should be displacement candles. It has nothing else to technically prove. So the more it gesticulates here, the more it could just continue to consolidate, which is not what we want to see. But today is a no news day. That's what the market does like to do, go back and forth taking liquidity. This is why you trust your model. Look at this. We're red across the board now. Red across the board. See this? This is all unnecessary. Because it doesn't matter how many fair value gaps it leaves open on the way down. We're still bullish. It could just catch them on the way up. But if it wants to go in and fill either, I mean, all of these as it slowly drops, then they could signal a reversal. But again, I think we'll hit the end dog before our session is over. We still got 2 minutes. Oh no, sorry, that's 3 minutes, 18 seconds. Just going to phase this daily candle out since we've already tapped it. 1 minute 27 seconds left. I want to see if it comes down here. Finally gets to our, that's the TP. I would like to see displacement candles. I want to see this market push fast. There's nothing for it to left for it to prove up here, unless it just wants to consolidate. That's the thing, right? Got to proceed with caution. $20 seconds. So I guess we didn't get that push. But anyways, those were the targets to the downside. We'll be live again tomorrow. Please check us out on fractaleffects.com where we teach high probability trading. Turn on your notification. Hit the subscribe button. We'll see you guys tomorrow, and then watch for the NDOG, DSD levels. That's your homework. Have a good rest of the day.